So this was about the National Financial Literacy Quiz, a joint initiative of NISM and SEBI. So for more info, you can visit our website nflq.nism.ac.in. So hello and good evening everyone. I am Mansi Ghanekar, working in the Investor Education Department of NISM. NISM is the capacity building initiative of SEBI. We at NISM conduct a wide range of activities at various levels with the objective of improving quality standards in the securities markets. At NISM, we work in 5 broad areas: long and short term academic programs, certifications for market intermediaries, e learning programs, training programs for working professionals and academia, and various investor education initiatives. Today, we introduce a series on proper financial planning to ensure goal fulfillment, comprising 4 episodes scheduled on every Wednesday of March 2026. The first episode, which is today, and will be conducted by Mr. Suresh Sadgopal and focused on the topic planning for children's education, a major priority for every parent. To introduce Mr. Suresh Sadgopal, he is the Managing Director and Principal Officer of Ladder 7 Wealth Planners Private Limited, a SEBI-registered fee-only financial advisory firm in India. Ladder 7 is known for its expertise in financial planning and advisory services for over 2 decades. He holds an MMS and certifications like CFP, CTA, PTM, and RLP. He is a frequent speaker and writer on financial planning and personal finance. Mr. Suresh founded the Financial Planners Guild, India, where he serves as a president. He is also a founding member of the Association of Registered Investment Advisors. Now, I would request Suresh sir to begin with the session.
Yeah, thank you so much, Mansi. I'll first go ahead and share my screen.
Yes, sir.
I'm just replacing your screen. I'm sharing mine. Is this visible?
Yes, sir, it is visible.
Uh, Great. Thank you so much for giving me this opportunity to do this series, actually. It is my pleasure and privilege to be talking to all of you regarding certain very specific goals that most people do have. Children's education is one such goal. And today we are going to, you can say, touch upon aspects regarding what we need to do in terms of planning as far as children's education is concerned. But before actually getting into children's education, I want to broadly touch upon the area of financial planning itself. See, this is one area which is really neglected among people. We, in fact, plan for everything in life. We plan for a day out, we plan for our picnics, we plan for several months for marriages. In fact, we plan everything, right? And it is such an irony that when it comes to our finances, for which we work for maybe 30, 40 years, we are leaving it much to chance. And when we are leaving our finances to chance, then all the goals which are attached to that and all the other wealth creation and other requirements we have in life are also left to chance. So this is such a irony actually in life. But we see in our practice that most of the people are not really planning the way it should be done. So, what is financial planning? It may sound something very arcane or very difficult to understand, but actually it is very simple. It is just the management of the available resources to meet your goals and objectives. It's as simple as that. So, where are you today? So, in financial planning, what we do is where are you today? Where do you want to go? And how to get there is the financial plan. So, if I have to put it in another simple words, so that is what financial planning is all about. So children's education happens to be one of the most important goals. So let me go to the first slide. So one of the things which people really put their heart and soul is in terms of buying a home, and for all the right reasons. Children's education is again something that people have as a very, very important high priority goal. Because people want to educate their children, they want to make them into good, upright citizens and who will do very well in life. Excuse me. And today, education is definitely the way for upward mobility. So, children's education is on top of the priority of most parents, and rightly so, like I said. Then there is retirement planning, and there are so many other goals. I've just listed some three or four goals, and then you have lifestyle goals, travel goals. You have somebody may want to buy a vehicle, somebody may want to have give something on philanthropy, may want to start a hospital. There can be so many things. They want to leave a legacy to their children. There can be so many different things. But today we are really going to focus on one of those goals because I mean we really cannot talk about everything. It will take a lot of time. So the focus today is as far as education planning is concerned. It's since it is one of the most important goals, and it's a very large goal today. Once upon a time, when many from my generation got educated, the amount of money that my parents have spent on education was next to nothing. And even the amount of money that my parents have spent on my college education was comparatively a very small a small sum. But education inflation has really gone up to even double digits in some cases, or upper single digits in a lot of cases. So suffice to say that we are really talking as parents about a big number for whatever education that you are planning for your children. And of course, we all know that some education programs are costlier than the others. Like suppose somebody who wants to pursue medicine, a child wants to pursue medicine, it can be something like 60 lakhs to 1.5 crores, 1.5 crores for education in India. If it is abroad, then depending on the university, depending on the country, depending on the incidental expenses, it can be anything, right? So education is something we definitely need to plan for, and we need to plan for right from the beginning. I mentioned slightly earlier that it is probably high single digits or even double digits. So the typical inflation that we really talk about is 6 to 7%. That is the normal inflation which we contend with. But education inflation, unfortunately, is rising far more than that. Lot of people, I mean, in our experience, do not estimate the effect of inflation on various things, including retirement or child's education, because these are all so far away. So it is not properly estimated, and they assume that okay, they'll be able to, uh, I mean, do that without any real problem. So this is a problem because many of the times the education goal may be still. I'm talking about the college education goal. The college education goal may be something like 10, 15 years away, but we need to properly estimate how much we have to spend for that. If we are going to plan late, the amount of money that we have to put aside during the later years is going to be humongous, and it may not necessarily be possible. And we are also going to look at parental funding. We are also going to look at other modes of funding the education of children, especially if children are going abroad. We are talking about several crores. Even in the case of post graduation, where it is only 2 years, it will be ahead of 1 crore. So the a typical figure for a post graduation will be something like 1.2 to 1.5 crores in a country like US. If it is UK, it will be very similar. In Canada, it can be slightly less. In Singapore, it will be less. And in China or other countries, it can be less. Germany and other countries, it can be less. So the point is, we really don't know as parents, we really don't know what we need to plan for, because when children want to attend a course, they will be applying for. Excuse me, my throat is causing a problem, so excuse me on this. So we don't know whether the child is going to pursue engineering or finance or medicine or any other psychology or any other course, and in which country they are going to do that. So we have to kind of broadly estimate, broadly understand as to what, as a parent, we can provide for, and the balance will have to come through either a loan or through self-funding or through other means, scholarships and other means. Okay, so we will have to look at that. Coming back to the point, late planning is again a problem, and we need to plan for children's education. Even the school education is costly today, so we need to plan for the school education and especially the college education today. So in financial planning, when we do, no parent is sure, because the children are also pretty young, and at the early age if you start planning, you don't know whether the child has an aptitude for medicine or finance or anything else. We don't know, right? So we'll have to plan in such a way that whatever ultimately is their interest area and wherever they want to go and pursue, we still will be able to support their aspiration. So that is how we will be planning when we are doing this planning exercise uh, for our clients. So the aspirations to study abroad is very much there. The financial question to ask is if somebody is going to study abroad, then there is a currency risk. If let us say it is a US or UK or any Eurozone country, uh, at least as of now, the rupee has been depreciating against many of these countries, many of these currencies. So that is something that we will have to take into account. And so, if it is reasonably well known that the child will pursue in US or UK, one can consider investing in those currencies so that at least the depreciation risk can be taken care of. The second is, I mean, there is a huge upfront cost in terms of medical and other courses. And is it possible for the parent to really absorb that kind of a cost is something that we will need to check out. I mean, even inside the country, the cost in terms of pursuing medicine is going to be high. In terms of elite institutions in India or other Ivy League institutions or other elite institutions abroad, even the tuition costs are staggering. So we'll have to really see whether the return on investment of crores of rupees is really worthwhile or not. I mean, it looks like studying in a Harvard or a Stanford and things like that are very worthwhile investment, and in a lot of cases it is. But you cannot really glibly assume that once you are graduating from any of those so-called Ivy League institutions, you are assured of a job. You may get a job. I mean, whether you are going to get a job commensurate with how much you have spent and commensurate with your efforts is a question worth pondering. I mean, what I would suggest at this point in time is one should also consult a educational consultant. I mean, again, when we are consulting an educational consultant, they are people who want to ensure that you send your child abroad. So we have a saying: if you ask a bartender, "Can I have one more peg?" the bartender is normally going to say yes. Or if you ask a barber whether I require a haircut, the barber is going to say yes, right? I mean, so with that, you will have to approach. I mean, you will have to see whether these guys are actually playing a fiduciary role. And if they are playing a fiduciary role, and you really have to ask all the right questions and understand whether it is really worth your while spending so much money and whether there will be a broad return on investment that you're putting up front. So today, I mean, there are lots of changes. I mean, it's an understatement, I would say. Tremendous amount of changes. Job landscape itself is evolving. Very recently, last 15 days, a lot of IT companies have been crashing because Claude AI has kind of come up with a model which can do a lot of this programming work, which at the base level and the medium level, a lot of programmers are today doing. So the job landscape is changing. Artificial intelligence is actually entering into virtually every sphere of life today, and it is definitely entering the business. And this is not like the banking software which came at one point in time. People are comparing artificial intelligence with, let us say, banking. It is not the same because artificial intelligence now is actually kind of replacing the human brain. So in that sense, it's a fundamental difference. What a thinking human can do, an artificial intelligence can do very well, especially the repetitive jobs. There are lots of new careers emerging, and there are lots of old ones which are going away. Example of a new career is somebody who is producing a YouTube video, and they are earning from that. They are producing courses, they are educating people on a particular area, and they are earning from that. So that's a completely new area. At least in the financial domain, they are called finfluencers. So there are new jobs which are coming up. There are potential opportunities which are there currently. If one wants to be a finfluencer, there is no particular qualification for that, but one has to prepare. How to prepare for that? Which course will be appropriate for that is something that we need to check out. The parent has to check out, and of course, the student has to check out. The career counselor will play a very vital role in this regard. So, the degree once upon a time probably opened certain doors. it is no longer the case. Like many of the companies also, like Google and Facebook and things like that, we have heard about that. They are not particularly insisting on even a degree. They are looking at competence and knowledge. And if somebody is able to meet the competence and knowledge requirements, they are willing to recruit even if one does not have a formal degree. So, and people who have degrees, it's not guaranteed that they get a job which will give them a certain level of income that they feel they will have to get when they complete a graduation or post graduation. So these are the realities today. We need to keep this in mind, and we cannot just join a course based on just the college credential or thinking that the course can actually open doors. So we cannot really take anything for granted. The world is changing. The parents have to ask, yeah, this question we have talked about that. Whatever cost they are going to incur, will the child be able to get back that many times over? And how soon can they get that? And whichever area they are getting educated, whether that area has potential or whether that area can be appended by artificial intelligence or anything else, or it can be a complete blow away by technology. Okay. Like, for example, when Geo came, the one who which got blown away was not another telecom operator. Of course, another telecom operator also got blown away. But what got blown away was actually the post office, because people need not have to again write a letter. If at 40 paisa, I mean, that was the promise. If at 40 paisa they are able to call and talk to the relative, why will they want to write a letter? So there can be huge changes which can happen, and some of it we cannot really exactly anticipate. So we need to be prepared. We need to ask all the right questions, and we need to plan. So only when we plan, and we have to plan, I mean, this is something we uh, always talk about. We need to have some amount of leeway, some amount of space, and some amount of area where if the situation changes, we will still be able to um, achieve that particular goal. So we will have to plan for those kind of contingencies, or plan B, plan C kind of situations, and the plan still has to work. So we will have to plan like that, and that is precisely what we endeavor to do. So education pathways in India, you have government colleges. Government colleges are comparatively inexpensive. They have been there for a very, very long period of time. The facilities in typical government colleges are good. The teachers which you generally have in government colleges generally are good. Whereas today, the number of government colleges and the number of seats which are available in the government colleges is comparatively minuscule. So private universities have also come to fill that breach, and many of the private universities are doing a good job. But private universities, there is a vast gap in terms of the quality from one university to another university. There are very, very, very good high class universities. There are other universities or other colleges which are nothing but fly by night operators. I mean, where the quality of education is extremely poor, and one can actually give it a skip. So we will have to be very, very careful about where we put our children. As far as courses are concerned, of course, this is a tried and tested thing for the last maybe 7, 8 decades. Engineering and medical. Architecture is also one such course. Management, yeah, in the past 3, 4 decades, it has become one of the sought after courses. Liberal arts has been there for quite a long time, but at least the career path in terms of liberal arts is not so lucrative as compared to engineering and medical. I mean, of course, if one does in liberal arts, there are certain vocations one can pursue, like advertising as a copywriter, visual artist, and things like that. There are openings, but the number of openings in these kind of areas are comparatively less. In the case of liberal arts, one can also pursue academics, and one can also pursue writing and things like that, content creation, things like that. So potential pathways are many, but that is in India and abroad also. Incidentally, liberal arts is something very, very sought after in countries like US, UK, and Europe. A lot of people pursue liberal arts. In fact, there is a shortage of people who are pursuing engineering and sciences. Yeah, today a lot of our children go to US, UK, Canada, and these other countries to pursue engineering, medicine, and other management and other courses. The only thing which we'll have to be clear is that, see, um, we'll have to look at not just the tuition cost. Sorry, I'm really sorry. So, one of the cost is the tuition cost. The other cost is the living cost. As far as the tuition cost is concerned, it is the cost which we will incur or rather give to the educational institution. As far as the living cost is concerned, it is the cost of boarding, lodging, and other incidentals. And that can also be substantial. For example, in a country like US, the cost can be roughly about 1 lakh rupees or more per month. It will be actually more, 1.5 lakhs, 1.25 to 1.5 lakhs per month. So it's not very small. It is substantial. And then there is a currency exposure, which also can alter your
Sir,
the
if
amount
you
of money that
want
you have to
to
make.
have water or something, you may please have it, no
Uh,
problem.
can
Or
I
anything.
just take 30
Yes,
seconds and I'll
please,
just
sir,
say
do
what I'm
that.
so sorry
Yeah,
about this.
no
So sorry.
problem, sir.
Yeah, sorry, having this problem for the past 15 days now, it's not going away. Yeah. So as far as currency exposure is concerned, if we want to send our children abroad to, let us say, US, we also have to consider the rupee depreciation. And if you are saving only by the way of rupee, then we will have to not only take care of the inflation aspect as far as education cost is concerned, we will also have to take into account the currency depreciation. Suppose the inflation is say 7% and currency depreciation is 4%. So we are essentially talking about 11% year on year, and we will have to factor that while we are actually planning for it, planning for education abroad. And we definitely have to consider the probability of getting a scholarship, considering that the education cost abroad is extremely high and scholarship is available, at least in the case of some colleges, especially in post graduation. Graduation is slightly difficult, especially in US or even UK. But it is available in some of the European colleges, even at graduation level, like Germany and all, it is available. And Germany also today offers English language education. Though if you want to have a wider variety, you can opt for German, but you will have to be competent in, for example, German. So scholarship probability is also something that we will have to evaluate while looking for education abroad. Very broad estimates. This can go anywhere depending on the course, the college, and everything. But very, very broadly, it can be 2 to 6 lakhs annual cost. Yeah, I mean, if it is a government college, it can be much less in this. It can be well below 2 lakhs. It can be maybe 30, 40,000, 50,000. That's all. If it is a private engineering college, then it can be 4 to 10 lakhs. That is correct. Take the amount as roughly about 5 lakhs, because many of the colleges like Manipal and SRM and VIT and things like that, well-known private colleges, I have heard a figure like 4 to 5 lakhs. But there are colleges which are charging more than that also. Medical, while it is 10 to 25 lakhs, it can well be more if one is going through the management code. Similarly, architecture can also be, depending on whether it is a government college or whether it is a private college and whether it is a management seat. Depending on that, it can be expensive, 4 to 8 lakhs. Abroad, I mean, annual cost can be 35 to 60 lakhs. 35, I would say, is really on the lower side. 50 to 60 lakhs is what I would ideally say is the cost. There can be some places in the US where it can be somewhat less, like 35, 40, but most places it will be 50, 60 lakhs. As far as UK is concerned, UK is pretty costly again. I mean, take it as closer to 50. Canada will be slightly less expensive. So Canada can be 25 to 40 lakhs, but again, closer to 40 lakhs. So the point is, we need to understand one thing. I was talking about inflation and the currency depreciation. Even assuming we take only the inflation aspect, okay. So what is 10 lakhs today? I mean, inflation and currency depreciation. Suppose both of them put together is, let us say, 12%. What is today 10 lakh rupees? What will cost you 10 lakh rupees will turn out to be 31 lakh rupees after 10 years. And this being a long-term goal, we are going to plan for the next 10 years, 15 years, and things like that. So it is very, very important for us to estimate this cost properly and plan for it properly. So education inflation, like I had mentioned right in the beginning, is somewhat more than the normal inflation because see, the demand is outstripping the available seats. So which is happening in India and it is happening abroad in certain very good colleges. Currency depreciation is something that we need to contend with. Currency currencies like US dollar and all that are depreciating by about roughly 4% on a long-term basis. Last year it has depreciated by a lot more, but on a long-term basis, about 4% is the depreciation. Um, so one of the things which we need to really do is we need to start planning for education. In fact, we have to start planning for all the important goals right from day one when we start earning an income. And in this case, when the child is born, you know that as a parent, you will have to really put the child through whatever education he or she may want after 18, 20 years. So one has to start right from the beginning, and starting right from the beginning ensures that the amount of money that you need to put aside is comparatively less, as the compounding will take care of the amounts that you require in the future. So the more you are able to invest for the longest period of time, the better it is. So education cost, this is what we have seen roughly 6 to 7 years, it kind of doubles. You can take the education inflation in India to be anywhere between 8 to 12%. This is again going to be different across courses, across colleges. So that is going to be there. Similarly, abroad also, it's 10 to 14%. See, abroad, as far as the general inflation is concerned, can be maybe 2, 3, 4%. But education inflation abroad also is actually pretty high. So this is something that a lot of people are not really planning for. So we need to keep this in mind. Inflation, whether in India or abroad, education inflation is actually pretty high. So how do we fund for this? So we need to have, there are actually four sources. One is the parental funding, which is through their savings and investments. We definitely need to pursue scholarships and grants. A lot of children want to go to the top tier colleges, which is a fair aspiration. But if the top tier college does not give, and they have got some maybe 2, 3 other colleges which are giving them scholarships, I mean, one has to be slightly more practical in terms of where one should actually ultimately take the admission, because a scholarship actually makes the whole process much easier from the parental point of view or even the student point of view. One of the other things, considering we are talking about crores of rupees, the education loan is something that the student has to definitely consider, at least to some extent, because only that will make the education funding, especially abroad, viable. And for a lot of people, even Indian education may not be affordable for the parents. They may have multiple demands on their scarce resources. Education is just one of them. So even for education in India, education loans may be required to be taken by the students concerned. Okay, we cannot assume that every parent has crores of rupees to spend on the children. It's not a fair assumption at all. So some parents may have pretty limited resources, and the children will have to be willing to take the education loan. So this is the third pillar. And the fourth pillar is the child's own contribution. This can happen especially for post-graduation. Like if the child has completed a graduation, if the student has completed graduation, it is a good idea to pursue, let us say, some kind of a job and work for maybe 2, 3, 4 years. In fact, that is good in another way. One is, of course, one can earn some money and put aside some money for future education. The second is the child will get, the student will get a good understanding of how a business or how a profession functions. So when they go into a postgraduate program, the quality of the what they are able to understand and imbibe will be much better. I mean, they'll be able to understand understand it understand much better because they have actually seen how whatever they have learned is actually working in a industrial setting or a business setting. So in the case of self-funding, for a lot of people who are getting a monthly income, SIP investments is a great strategy. I mean, that is the easiest strategy. SIP, when I say, it's not only equity, it can be equity, debt, it can be anything. Okay. But putting aside some money every month, aside for children's education and for other things, is very, very important from day one. So how much equity, how much debt, or how much other assets like commodities or any other thing is something that we will have to decide on a case by case basis. But it is very, very important to understand what we need to put aside for that particular client family so that all their aspirations, including their children's education, are met properly. So scholarship, I mean, we have talked about that. We don't know for sure whether the child is going to get a scholarship. It can be merit-based, it can be need-based, sports and arts-based scholarship, and certain university grants. So some of these are available abroad also, especially based on merit and sometimes based on sports. Education loans, this is a great way of ensuring that the child is able to pursue something which otherwise will be not really possible. Okay, so we will have to consider definitely what is the interest rate being charged. There will be probably a collateral which will be demanded in many cases. In some cases, without collateral, also up to a certain level, they do give education loans. So we'll have to see what is the EMI burden. So in the case of education loan, there is a moratorium period where only the interest can be paid, and once the student actually goes for employment, at that time, from that time onwards, the actual EMI can start. So we need to find out what are those features and benefits. There's a tax benefits section 80E. It all depends on whether we are going as per the old or the new tax structure. Sorry, it is giving me a lot of trouble. I'm so sorry. So this is going to be educational loans are going to be useful for funding the education. I mean, money gaps. Child contribution. Like I mentioned, especially in terms of post graduation, if the student is going to work for any length of time, they can actually put aside some money so that some portion they can contribute on their own. There are courses where one can pursue the course and at the same time also work. In that situation, it's a part-time work which is available. In some cases, even full-time work is available. If the course is of such a nature that you can do the course from wherever in your own time, spare time. Especially when somebody is planning to go abroad. It is in the best interest of the child and the parents, that the child, the student actually looks for certain way of earning money. It can be a research assistant kind of position, librarian kind of position, or any other teaching assistant kind of position, which will kind of partially defray the expenses which they are incurring while in that other country. Okay, so so this is a very typical approach. This is not, I would not say that this is the only approach. If it is, if we don't have too much time, then we will have to be, we will have to go for capital protection. If the child is 16 plus, we can go for limited amount of aggression in the portfolio. But if we start pretty early, then the aggressive element in the portfolio, that is a volatile aspect of the portfolio, which includes equity-oriented investments, can be more. Because the equity-oriented investments do compound at a better pace, and they will be able to beat the inflation, and in the case of education abroad, the currency depreciation also, it can beat and it can give that further alpha. If it is 6 to 10 years, the child's age is 6 to 10 years, which means that you have anywhere between maybe 10, 12 years, maybe 8 to 12 years with you. Then it can be a growth allocation where the equity is less than the typical aggressive allocation. Aggressive allocation can be as high as even 75%. The growth allocation can be 55, 60%. Balanced approach can be slightly less than that, probably 35, 40. Capital protection will be minimal amount of equity, maybe 15, 20% equity. So there are multiple options which are available: equity mutual fund, index fund, hybrid funds. These are definitely not the only things which one can plan with. There are so many other different options. As financial advisors, we use a whole range of products to plan as far as the retirement. Education funding is concerned, even retirement funding for that matter. So a typical aggressive allocation will look something like this. So equity can be 70%, hybrid allocation can be 20%, debt can be 10%, वगैरह वगैरह. But again, we as financial advisors, we also look at what is the risk profile of the person. We don't blindly go for equity allocation, which is extremely high. If the person is inherently conservative, and they cannot really stomach even the intervening volatility. So what we are talking about, what we are suggesting here is indicative. This is not something that we can apply in every single case, but this is kind of indicative. So the typical mistakes that we see with a lot of people is they start late as far as the education goals are concerned. The typical goals which one second. The typical goals which one has in the early phases are something like buying a vehicle, buying some white goods, and things like that. Depending only on the loans at a later stage is not a great idea, because there's only so much that you can get by way of loans. There are typical insurance products which are available for children education planning. They may not be the most appropriate vehicle, and we'll have to look at what is the most appropriate investment option to ensure that the children's education funding will be at an appropriate level. A lot of people do not understand the effect of inflation, how much it eats away into the corpus, and how much underfunded they will be if they do not really take into account the inflation. Sometimes what happens is they eat into the corpus more than intended. So something, for example, what has been planned for education goal, a lot of it is taken away by the home goal. These kind of things also sometimes do happen. Sometimes there is an overestimation of other funding options apart from the parental funding option, like overestimating scholarship and ability to take a loan and things like that. And if they don't take any protection while they are planning, see, because people do lose their jobs and things like that today. I mean, so planning well with a margin of safety is the right way to go. So when education planning is done, I mean, health, emergency, term insurance, all these things are very, very important, because if one does not have the security nets in place, then one has to fall back on what one has been putting away for the important goals, which includes education. So it's very, very important for us to plan in such a way that we have security nets in place while we are actually planning for the goal. Okay, so there are certain things which parents have to ask themselves. Are they putting the child through education because of the child's aptitude, or because everybody else is actually putting their children for engineering or medicine? Because there are so many other viable paths which are available today. What is the ROI? We have talked about this before. Is it really worth spending on that course? And the parents have to be slightly sane about sending their children abroad. First of all, is it possible for them to fund that kind of education, fund that kind of expense? So they will have to really find out whether it is viable for them. Lot of people do dip into the retirement corpus for everything, all and sundry, including the child's education. So this is something that the parents will have to really abstain from. Children can take educational loans, parents cannot take retirement loan. I am particularly saying this because uh, very, very often, many of the parents, what they have what they have accumulated as a nest egg, that they are using for their children's education. And we have actually seen cases where they have spent 1 crore, 1.5 crores, and things like that. The child did not get a job abroad, and they came back and took some other job like any other student. I mean, 40, 50,000 or maybe 60, 70,000 job. I mean, for that, why do you have to spend 1.5 crores? So we'll have to be very mindful of what we are willing to spend, and whether we are spending on the right kind of courses, whether we can really afford that. So all those things we'll have to be really mindful. What is the education goal? A lot of times it is very difficult for us to clearly articulate that, especially at the early stages. But it is a great idea to plan for the goal, which probably may take the most amount of money. For example, in this case, it can be medicine. If we are able to plan for that, then if the child is going to pursue, say, maybe a BCom or a BA or something like that, I mean, it is only going to be positive. Future cost needs to be estimated. Today, online, there are so many calculators available, which shows if the cost is X today, what will be the cost in the future. It's a reasonably good estimation. What is the funding mix that we want to have, and how can we change the funding mix over a period of time? That is something that one has to really decide over a period of time. See, these things become very, very easy if somebody has a financial advisor. That person will do all these things. Otherwise, a bit of reading and bit of, say, common sense will help them with all this. Starting monthly investments early is one of the surefire way of ensuring that you end up with a decent corpus for the children's education. As far as the uh, money that is being put aside for this goal and for all other goals, it is a great idea to review what you have done and whether it is going on whether it's on the right track, and review that annually so that you continue to be on track. The financial planner typically estimates what would be the realistic education cost after asking all the right questions. Indian education, abroad education, what is the aptitude, uh, what kind of courses one may want to pursue, what up to what level do you want to fund, and things like that. Lot of it can also go wrong because the child's aspirations can come in as a surprise at a later point in time. But that is what a financial planner is for. I mean, so we are planning for something. As we go along, we will, I mean, we'll recast the plan to point to the right direction. So, and we'll replan accordingly. Goal-based investments are a good idea, um, especially in case where you don't, I mean, you don't have a financial planner. In our case, we also go as per the overall corpus, and we will be able to fund all these things. So we keep a close watch on that. But for all the other people, um, goal-based investments are again a good idea. Loan dependency uh, should be kept to, I mean, I would not say minimum, but at a level where it can be easily tackled by the student when they get a job. Managing all the financial risk is important. Aligning education with the long-term financial dependence, so that is also important. I mean, it cannot be like a course where you're going to pay off the loan for the next 10, 15 years. In India, you can pay it off in 8 years. Abroad, I mean, there are education loans which can run for even 25, 30 years. So, I mean, that is not the ideal way to do it, because education is just one of the goals for which we take a loan. There are so many other important goals like housing and other things also, car or any other thing, for which also we'll take a loan. So otherwise, if we go overboard, we'll be only, the entire life we'll be actually settling loans, nothing else. So yeah, so I have finished this thing. I mean, I have written a book called If Godfather Was a Financial Planner. It talks about financial planning, life planning, personal finances, and all that. God comes throughout the book, and it's an easy to read format. It's in the form of a story. If you have, I mean, if you have the time, please do go through the book. These other information is also given here. That's the end of my session. Sorry about my voice. I mean, this is really troubling. Thank you very much.
Now I request attendees to ask their question in Q&A. So I think we can take a couple of questions and conclude this session.
Sure, sure.
Yes. So request attendees to ask the question.
So no questions at all, is it?
Yes. Yes. There are questions. Means they are asking. You
There
can
are
address
questions. Okay.
a couple of questions. Okay.
If you're not okay, can you do another day while, okay. Yeah, thanks so much. Please show the last 3 slides. How one should plan to mitigate risk. I think I'll take this particular thing. One of the things which I had mentioned in terms of mitigating risk is the security net itself. Because see, if you do not have a proper security net, let us take the health risk. If one gets admitted to a hospital, maybe multiple times during the lifetime, and one does not have a proper health insurance, then obviously some of the money which has been put aside for one's goals will be able to will go for the health requirements. Okay, one will fall short. The other risk is in terms of inflation. Inflation and currency risk. As far as the currency risk is concerned, you can mitigate that by investing in the investments abroad, like in dollar terms, so that the dollar value does not change. I mean, so if you have invested for $1 lakh and you are able to accumulate $1 lakh, and the course is going to cost $1 lakh, you are through. Even the rupee depreciates, you are not really affected by that, because $1 lakh have already been accumulated for whatever requirement you may have. So these are a couple of things which you can look at. And as far as the inflation risk is concerned, we have talked about that. We need to assume 8 to 10% inflation in terms of education. So we will have to properly estimate at what point we will require the money, because the money is not going to be required at one point. So you may require over a 3 to 6 year kind of a period. So you will have to estimate how much money you require. And then there are calculators, like I said, all over the net, you have a lot of calculators. you can check out how much you require at what point, and accordingly you can plan. So the next one is by Pradeep. Can this financial planner can be a career, either a side business or income source? Yeah, financial planning can be a side career. I mean, that is what I'm told. But I don't see how that can be a side career, because I mean, I have been in this career for a long time. This is my 22nd year as a financial advisor. I have a firm, Ladder 7 Wealth Planners. We have a lot of advisors, and I mean, sometimes even being full time, it is very difficult to serve all the clients all in proper time. So I'm not very sure. I'm not sure whether this can be a side business or an income source. A lot of times MFD or those kind of businesses can be a side business or an income source, or insurance and things like that. But this is a immersive career, and we are really talking about intimate relationship with the clients. So slightly difficult to have a side career, especially in terms of financial. Thanks a lot, Gauri, for reading the book. Very happy to note that you have joined the CFP course based on reading this. Second last slide. I'm going to share the entire presentation. In fact, I've shared the entire presentation with Sahil. Sahil, please go ahead and share it with all the participants. I have no problem at all. Pavan is asking, parents having conservative risk appetite, which asset allocation is best? So, if you have a conservative risk appetite, typically the equity allocation will be between, say, maybe 15 to 35%. Probably it will not go beyond 35-40%. The only thing in such an allocation is that either you will have to you will have to be mindful of the fact that the goal which you can attain is going to be rather your contribution is going to be rather rather small as compared to another person who has invested in equity oriented assets. Or you are, actually having a lot of money. It doesn't matter whether you have put your money in FD or some post office investments, but your money to start with itself, or your income pipeline to start with itself, is very, very robust. So you will be able to anyway achieve those goals. Otherwise, it's very difficult. The other way of looking at it is, if you go to a financial advisor, and the financial advisor, after understanding your risk appetite, will probably operate at the higher end of the scale. And for one or two goals, they may take the call to keep it beyond your typical risk appetite for a certain length of time, in the interest of helping you to achieve that particular goal. So there are multiple ways of looking at it. Whatever is comfortable, whatever works for you, either you can do it, or you can do it with the help of a financial planner. Janvi is saying, at what age can we start doing financial planning? There are quite a few myths about financial planning, or wrong notions about financial planning. A lot of people tend to think that financial planning is only for the very well endowed or for the rich. If somebody is really rich, really has a lot of money, they don't require financial planning. If they lose 50 lakhs, it doesn't make a damn difference to them. If they have 20-25 crores, a 50 lakh loss will not make a difference to them. Whereas if a person who is having 50 lakhs, even if they lose, let us say, 5 or 10 lakhs, it will make a world of a difference for them, because they have a very limited amount of resource. So the margin for error in the case of people who have comparatively limited means is actually low, and financial planning is required definitely for people who have limited means. I'm not saying it is not required for the people who have good amount of wealth. So that is one explanation. What is the time to start financial planning? Ideally, at the early stages of life itself, if you start, you would have brought in a structure and discipline to the way you approach finances, and because of that, you will be able to meet all the goals. You will be able to accumulate wealth. You will have enough liquidity. You will have a comfortable retirement. The earlier you start, the better it is. So I would say early 20s itself, if somebody is able to start, at least in terms of actually putting aside 10%, at least 10% of what one is earning, and starting to move towards 30% of what one is earning by, let us say, late 20s and early 30s, that will be a great thing. So, answer to your question, Janvi, is that as early as possible, get into the structure of financial planning. Sunil is asking, what shall be the frequency to review education cost inflation? Good question. Anywhere between 1 and 3 years, at least once in 3 years, you should review the education costs. But assume that 8 to 10%, it is not going to be, inflation is not going to be less than 8 to 10%. But keep a, I mean, keep a lookout on what kind of cost structures are currently coming into the view. Karnam is asking how to select the right asset class for investing for education goals. Karnam, I have mentioned that, there is no particular one asset class to invest. It will probably be equity, it will be commodity, it will be debt, it will be certain other investment types also, properties and other also. So on a case by case basis, we will have to see where we need to invest. Equity and debt are the most common asset classes which we use for education goals. There are other people who use also property. I am not really greatly a fan of using property for education goals, because in some cases I found that people are extremely asset rich. We had a case about 10 years back. Somebody had about 25 crores in assets which were entirely in real estate. But when he wanted to send his daughter abroad, he was not able to liquidate any of that and he had to take a loan. So we know about this kind of a case. So we will have to invest in such a manner where the asset class is going to be available to you. It does not really depreciate in terms of capital values, and it comes to the right amount of money that is required for that particular goal. So it has to be properly calibrated. So if one is in a position to do that on one's own, it's fine. Otherwise, one should ideally take the help of a financial advisor. So a lot of times in finances, I don't know, for some reason, we don't go to a financial advisor. For everything else in life, we have an advisor. Like for anything to do with legal matter, we go to a lawyer. Anything to do with, let us say, if we want to construct a house, we go to an architect. We get a blueprint. If there is anything to do with our health, we go to a doctor, and so on, right? So why are we not taking professional advice in the case of our own finances? It's the right thing to do. Ankit is asking, what we review annually, profit or right funds? See, as far as investment returns are concerned, it is a factor of the market. That is not what we as financial advisors promise to anybody. Like if you look at the equity returns in the last year, sorry, last calendar year, it has not been really fabulous. But if you look at the equity returns, Indian equity returns over the last 40 years, it has been really spectacular. Say 14-15% is the kind of return over a very, very long period of time. So we should not really fixate ourselves in terms of what returns we are going to get. We have to have time on our side. Time is what will work well on our side. And you are right. Our money has to be put in the right kind of assets. So once you choose the right assets and you have a fairly long period of time for the assets to compound and yield the right result, then it should work with you. I think I'll take a pause here. I'm so sorry. I'm not able to continue. Yeah. Thank you so much.
Thank you. Thank you so much, sir. We would like to extend our heartfelt thanks for taking time and speaking at the webinar. Also, thank you for sharing your time and knowledge with us. Also, wishing you and your family member a speedy recovery and good health. Take care
Thank you
and
so
get well soon, sir. And we'll meet you again next week for the second episode of the series, that is on 11th of March. And also request all the attendees to join in for that episode as well. And regarding the presentation, you all can watch recording of this particular session on NISM Investor Education Webinar YouTube channel, and I have shared the channel link in chat section, so you all can visit the YouTube channel. Thank you. Thank you, sir. Thank you again.
Yeah. Thanks all the attendees and thanks to NISM. Thank you so much.
Yes, thank you so much, sir.